So a rare metal that most people probably don't hear the name of that often has been hitting record high prices as of late. That being palladium. It's similar to platinum, and the two are often usually found close together in price, except for times like right now. It's in fact from the same group family of metals as platinum, creatively known as the platinum group metals. And as is usually the case with anything, its record high price range at the moment is due to more than just one factor, both of which or all of which we'll get into today. So welcome everybody to this week's episode of Energy and Resource Stuff. Like always, we do on these episodes every single week along with other types of videos here and there. So if you actually like hearing about these things, then please by all means subscribe to the channel and stick around. Also hit the bell icon, otherwise YouTube will never tell you about anything because YouTube's become self-destructive as of late. But that aside, here we go. So palladium, like platinum and gold, is a pretty rare metal, priced in ounces like the other two as well, usually within the same price range as platinum, but not always. Right now, for instance, there's a pretty big gap between the two of them, and just recently, in the last few weeks and months, palladium has been hitting all-time record highs, touching $1,122 per ounce at one point recently, and a little before that, hitting $1,127 per ounce. And these are uncontested the highest points that it's ever gotten to, even looking further back into the past and accounting for inflation. Now there's a dual reason for both this particular price spike this year and for its overall recent trend in increasing price over time. This year in particular, on multiple occasions, especially over the summer, there were repeated strikes by mining workers down in South Africa, where a huge portion of the world's palladium is mined. Obviously, when all their workers are on strike, mines don't exactly operate. So there were constant periods of days, sometimes weeks at a time, where the mining operations in South Africa, where about 40% of the world's supply comes from, were shut down. Now, its overall recent rise over time is just due to, like with most other things, constant increasing rates of global consumption. Most palladium, between half and 60% of it, is consumed in the manufacturing of catalytic converters, devices on the underside of cars that catalyze a quick reaction as the exhaust is flowing out to detoxify it, remove some of the more undesired pollutants from it. Otherwise, vehicle exhaust would be a lot more toxic than it already is. And as you can see from several charts I should be showing on screen, the sort of rise of third world nations up to second world status and second world nations up to first world status has obviously sent the annual world manufacturing and sales numbers of automobiles absolutely skyrocketing. So more than obviously millions more automobiles every year means millions more catalytic converters each year, which means a lot more palladium being consumed each year. And alongside with rise in automobile manufacturing, there's also the worldwide skyrocketing consumption of electronics, some of the components of which, some particular types of capacitors inside, utilize palladium and also platinum. And so here, on these charts, you can obviously see the blatant skyrocketing going on as well. So that's what's behind that. Price-wise, over these last few weeks, palladium has been fluctuating between about $1,070 and $1,120 an ounce. It recently, over the last few days, came back down below $1,100 an ounce, and so now we'll have to see where it goes from here. But jumping into the regular lineup now of everything that we go over, starting with U.S. oil production, which took a big jump up from 11.2, now up to 11.6 million barrels per day. As output from the Permian region continues to increase, also several large fields that were discovered in the Gulf of Mexico over the last few years have recently been coming online. If you remember last week specifically, we mentioned that the U.S. Gulf of Mexico oil output is now at the highest level it's ever been. And also even some more fields up here in Alaska up on the northern coast have been coming online as well. So a lot of new additions sort of culminating together all at once to give us this 400,000 barrel per day jump. U.S. oil consumption over this week remained above 20 million barrels per day, specifically at 20.4. Specific product numbers within that being gasoline, right at 9.1 million barrels per day, jet fuel at 1.75 million barrels per day, and diesel fuel 4.3 million barrels per day. Price-wise, oil gradually kept dropping over the course of the week from the mid and lower 60s down to just under $60 per barrel. U.S. natural gas production dropped a little bit from last week from 98 billion cubic feet per day down to 97.6. U.S. natural gas consumption this week was 83 billion cubic feet per day. Specifically, demand for heating continuing to rise, as the pre-winter cold temperatures are not letting up in any way. In fact, they're actually getting more severe. Amount in storage increased for what will probably be the last time, if not the second to last time for this build-up season, now standing at 3.21 trillion cubic feet in storage, where it would normally be about 3.9. So between 15 and 20% under par, making for the possibility of a really interesting winter if the present cold continues and if this winter for the lower 48 states is anywhere near as severe as the last one was. Then, as I repeatedly say, I suspect by the end of this coming drawdown season, U.S. natural gas inventories will be drawn down below the 1 trillion cubic foot mark. Canadian natural gas inventories, although unfortunately they only update monthly, they have basically already stalled, and on their next update they are likely to begin dropping. Just as I expect on the next update, the U.S. inventories will also begin dropping. And in response to all of this, the market sort of finally reacted, you could say, as natural gas jumped up by 15 to 20%, jumping up from being between $3.20 and $3.30 per thousand cubic feet to over $3.70 per thousand cubic feet just over the last few days. And I highly suspect it's heading back up over $4, with the strong possibility of going above $4.50 before the end of this drawdown season. Now, unfortunately, the OPEC data was not released on time, again, so I don't have a whole slew of international numbers for you. I do have a few, along with a few other just random oil and gas developments from across the world. The first being a ship-to-ship collision between a massive 600,000 barrel oil tanker and a Norwegian naval vessel just offshore from one of Norway's primary export terminals, rendering that tanker out of service and rendering that terminal closed for at least a week or so, and taking roughly 365,000 barrels per day of production offline. Also, similar to how Suriname, a small country to the east of Guyana being the South American nation offshore of which ExxonMobil has recently kept discovering billion barrels after billion barrels. Suriname, being its neighbor obviously and sharing roughly the same geology, had hoped that they would find a bunch of oil under Suriname territory as well. However, wells drilled in Suriname came up dry. Similarly, the West African nation of Gambia, neighbor of and technically inside of the nation of Senegal, also hoped to find oil within its small territory, as large discoveries had been made just to the north offshore of Senegal. However, this week, results came up from wells being drilled in and offshore Gambia, and they came up with nothing, just like Suriname. Now, I was able to get some data for 2 countries, but that was unfortunately it. Mexico has continued dropping in its terminal decline, now dropping down to 1.83 million barrels per day. Again, Mexico now being tipped into an oil importer, as Mexico's average daily consumption of petroleum is about 1.9 million barrels a day. And Nigeria, thankfully, has finally almost recovered all the way from its massive production drop that it suffered almost 2 years back from that massive Boko Haram attack, dropping from about 2.1 million barrels per day being its former average down to 1.3. It's taken them almost 2 years to fix everything up and get back up this high, but they are almost there, and they are now back up to just below, and I mean just below, 2 million barrels per day. Alright, that's about it for this week. If you enjoyed listening in, then like the video, and don't forget to subscribe to stick around. I have links in the description to my Twitter you can follow me at, and for anyone who feels like giving me their money so I can waste it on more German chocolate, then links to my PayPal and Patreon are also down in the description below. I will see everybody around next time.